Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 7th, 2017. So stocks moved more or less sideways, but generally speaking it was quite an eventful week, with a bunch of possible bearish reversal candles on stock funds. Um, Additionally, the United States attacked Syrian Air Force base. And I think as a result of that, the Russia ETF RSX gapped down. However, longer term, I still think that the stocks are bullish. This is confirming, my long-term stance with various high beta sectors hitting all-time highs. Additionally, the junk bonds are also confirming the bullish posture. However, we'll look at corporate and treasuries, and they seem to be running into resistance. Dollar seems to be breaking out above previous resistance and pretty much against all other currencies. And as a result, of course, gold is under pressure. I think oil again is overbought and is looking toppy, and natural gas again is pushing higher and is bullish. Alright, let's move on to S&P 500. This is SPY on the daily time frame. So definitely a bullish chart. These are all-time highs. We're pulling back from all-time highs. Right now the 50-day moving average has acted as support, and we rallied off of that. We came very close to fresh all-time highs, but this candle here on Wednesday looks somewhat bearish, but so far there was no follow-through. So one candle in isolation doesn't really mean much. So it does look like a bearish candle, but like I said, we need more follow through, but I just don't see it yet. So for now, I would say that this candle has not yet played out. We had advanced decline line was hitting all-time highs back in March, and right now it's normal, we're pulling back, so I don't see any bearish divergences, but I don't see any bullish divergences either. So right now what I'm seeing is a normal orderly pullback from fresh all-time highs. Somewhat longer term, here's my proprietary market breadth index, definitely bullish. It's in a bullish territory at 5, not even a remotely weak chart, very strong chart basically. Longer term, percentage of stocks above the 200-day and bullish percent index, normal pullbacks from the very high readings. Also the momentum indicators here, for example RSI, is also pulling back from overbought territory. I don't see anything abnormal about this right now as of yet. S&P 500 on a longer term time frame. Here is the weekly time frame. Again, same thing. Looks like we pretty much got stopped here at the resistance pivot point 1. Pulled back, more or less continue to pull back, but again, these are all-time highs, so we're entitled to a pullback. And you can see, for example, here in last August, also all-time highs, and we got a pullback, and then we just rallied from there. So maybe we're already pulling back. We're getting close to May, sell in May and go away kind of thing, but maybe this year it will start in April. Who knows? But again, this is a bullish chart, and I would not attempt to short it anytime soon. QQQ, the Nasdaq 100, back here in November there was some concerns about technology sectors, and it was basically underperforming, but right now it's again back to outperforming, and again fresh all-time highs. So for new traders, beginner traders, bullish charts, I would avoid shorting them. this is a bullish chart. You can tell it because this is our all-time highs, and this is, this were all-time highs back here. So you need like a very strong reversal to flip this chart into a bearish chart, and it's just not there. Bullish securities continue to make fresh highs after small shallow pullbacks. Again, confirmation from advanced decline line. So again, I would not short this chart anytime soon. Here's a longer term perspective on QQQ. A little bit of a divergence here from percentage of stocks above the 200-day moving average and the bullish percent index. We were at well, I cannot say they were overbought, they were just high readings, at 89. Think about it, that's almost 90% of stocks are trading above their 200-day moving average. That is very high reading. So pretty much every single stock within the QQQ was trading above the 200-day moving average. So it is entitled to a pullback. And even without it, so it looks like we have a little bit of a narrower breadth advance, we're still making fresh highs. So it's a little bit of a narrow breadth advance. How much will it matter remains to be seen. Again, this is you can think of QQQ as a sector also, because it's not really, it's more of a technology, basically technology sector. Versus S&P 500, which is much more broadly diversified. In fact, here's XLK, very similar pattern to QQQ. Again, I would not attempt to short it anytime soon. These are fresh all-time highs just this week on Wednesday. And again, all-time highs in advanced decline lines as well. So very good appetite for risk as well. Here's XLY, and this is as economically sensitive as it's going to get. You got airlines in here, and you got all kinds of entertainment stocks. So this is very economically sensitive, and these are all-time highs. This is showing that the economy is very strong, despite what some commentators might say. Labor force participation is an entirely different story, but unemployment is dropping, or at least it's not rising. So this is showing very good, I think, economic posture for the United States. And same here, the advanced decline lines are hitting fresh all-time highs. So again, I don't see really anything to indicate that this is a major top here. On a small cap universe, here's IWM, all-time highs here in March, orderly pullback, more or less normal pullback. A little bit of a bullish divergence, if anything. Looks like we made here at the end of March, we made slightly higher highs relatively to mid-March highs on advanced decline lines, but we have not yet broken out above the beginning of the March highs on the index itself. So if anything, maybe there is a slight bullish divergence here for IWM, the Russell 2000 small caps index. NYA, New York Stock Exchange Composite, can't really trade this, but these are all-time highs in March. Normal pullback again. Here, what I wanted to point out is the advanced decline line also hit fresh all-time highs just this week. This is again showing that there is no major issues that, that I can't really see many major issues with this chart. Longer-term participation is also pretty good. A little bit of a pullback from very high readings here, but no major divergences just yet. Here's Dow Jones Industrial Average. Fresh highs here in March, now a normal pullback. Looks like the 50-day moving average is acting as support here for now. Again, I I don't see any major issues with the advanced decline lines. If anything, I think it's ready to pull higher and maybe take out the all-time highs yet again. Financials pulled back from multi-year highs, but I think they're finding support here. We see many like hollow candles here in mid-March. I think that once I get to bonds, I'll show what I mean. I think bonds maybe they're going to move back down, and this will improve the bottom line for banks. So there's a lot of banks in this ETF XLF. So I think if bonds decide to pull back, I think financials will benefit, and they could easily take out this multi-year highs again. Here's Russia. Now, if you haven't heard, there was a retaliation against Assad in Syria by United States military. There was a missile attack that occurred I think on Thursday here. Next day, you can see a big gap here down, by on Russia ETF RSX. This is an oil-dependent nation, but additionally, I think there's a lot of, obviously insecurity about this because Russia is operating in Syria, so there are a lot of concerns about this as well. I probably would not want to trade this chart, me personally. I'm not a big fan of this chart on the long side, and I don't really want to short it either, so I just kind of avoid it for now. And that's what I tell my subscribers. If I'm not sure about the chart, I just avoid it basically. But this is a volatile fund, so if you do decide to trade it, size your positions accordingly and do be more careful basically. And finally, here is junk bonds, JNK. I continue to point out that I group junk bonds more with stocks than with bonds. And you can see correlation coefficient here for junk bonds and S&P 500. It's strongly positive. In other words, the junk bonds move together with stocks, in unison. So all-time high, and by the way, this is a chart that is adjusted for dividends. So all-time highs here back in March, pullback, surge, throwback, found support exactly at the pullback level, took out the stops. Notice that it was a stop was 3603, and this throwback went as low as 3602. So the stops were here at 3602, I guess, and then we just rallied from here. This happens quite often, actually. I've seen it before. Bullish posture definitely on this chart and on stock market in general. Again, this is junk bonds on the weekly time frame, adjusted for dividends, and you can see that the correlation coefficient is quite high, so stocks and bonds move together. So all-time highs here on junk bonds and normal pullback, and now a reattempt to go even higher again and challenge this all-time highs. So overall, I think stocks are bullish, and we're seeing more or less a corrective pattern following a surge from the November lows. Where this pattern will stop or how it will unfold is pretty much anybody's guess, but I think again that the stocks are bullish in the long term. Moving on to bonds, here's TLT, 20+ year Treasury bond fund. So looks like bonds moved up from March lows, and this is approaching 52-week lows. This is a 52-week lows here. This is also an adjusted chart for dividends. So the bonds moved higher. There's pretty clearly defined resistance here at around 121, 122. Now again here Friday, this is looking rather bearish. This candle looks rather bearish. So Here I didn't see enough selling pressure to, warrant, uh, short position or anything of that nature. Here I'm seeing already much stronger selling pressure. Now, again, anything is possible, and maybe Monday will just turn around and maybe even gap above this resistance at around 122.38. But this is not looking good right now, honestly. So again, it's possible that the bears will come out and push the prices lower. There is still this unfilled gap looming large up ahead with the 200-day moving average. So lots of resistance at around 127. Longer term, it's not as clear-cut which way this will go, because these are all-time highs, but these are 52-week lows, so it is difficult to say with certainty where this will go. Right now it looks like we have a possible double bottom here at around 115, 116, and now we moved higher. But again, here is a weekly candle, and this certainly looks like a shooting star rejection candle. Moving on to LQD, which is a investment grade corporates, again adjusted chart. So we're again attempting to fill this gap here, and we're again being rejected at the 200-day moving average. Last time the bears were very successful here. We'll see if the bears will be successful here again. This chart is not as, I think it's more clearly bullish than TLT. I mean, these are all-time highs, so we basically came down and retested the breakout level above the March 2016 breakout, and now we're making lower lows and possibly lower highs. I think this chart is more bullish than TLT, but as I said, this does not look like a very bearish bullish candle, and it's possible we'll unravel from here and continue lower. If this does indeed happen, then banks should benefit, and XLF should move higher. Right, moving on to the Forex universe. Here's US dollar index on a daily time frame. So I showed this last week. Looks like we've been taking out stops from previous support levels. So for example, here in February, they took out the stops from December lows, and looks like here in March they took out the stops from February lows. So they took out the stops and rallied, and this Friday, this is a very bullish looking candle, so it could be like a breakout above previous Wednesday highs here, and that's definitely a good sign for dollar bulls. I am a dollar bull as well. Here is the reason why. This is a weekly time frame for US dollar. Clearly, in my opinion, a bullish chart, multi-year highs, normal pullback. Here we have a partial gap actually. Still it's a partial gap, and last week I showed that this weekly candle looked like a bullish engulfing outside reversal kind of candle, but I said that we need a little bit of a follow through to confirm it. This week it was definitely confirmed, so this looks like a bullish engulfing pattern, and I think we may actually challenge this multi-year highs now. And when we get to gold, I'll show that this will weigh on gold. Here's euro on a daily time frame, and notice where the resistance came in, exactly at the 200-day moving average, and more importantly at previous resistance that was formed by broken support from here, from November. Broken support was from October lows here. There's a broken support, an attempt to rally that was rejected, so now we have resistance reaffirmed, yet another attempt to rally in February, yet another resistance reaffirmed, and another one just now in March. So looks like there is a lot of resistance here at this levels at around 108, 109, 108.5, 109 levels. And this is a bearish security. Euro versus US dollar is bearish. The reason is because of this longer term weekly chart. These are multi-year lows here, just in November, December. This is, in my opinion, basically an oversold bounce that is now being rejected. Again, anything is possible, and also it is also possible that we will turn around and attempt to again break above the 200-day moving average here. But I think the bigger trend is down. So if I was trading this chart, I would definitely be shorting this chart, not going long. Here's US dollar versus Japanese yen. So Japanese yen gained slightly, 0.26%. This is the opposite. This is US dollar versus Japanese yen. So the Japanese yen this week gained slightly. I think this has to do with the safe haven status of Japanese yen. But I think the bigger trend for the yen is down, and the dollar is winning this battle. So I think, we have basically a surge where US dollar is winning the battle. Now it looks possible like a fallen flag. Eventually this fallen flag will bottom out and we will see a rally higher. I think the dollar is winning this battle right now. So again, the dollar I think is bullish, and I think we may still see fresh multi-year highs sooner rather than later. Here's gold on the daily time frame. Stiff rejection candle right there on Friday. If you watch the overnight action, this candle was full. It was white full. It was like this. It was a filled white candle, rather a hollow white candle. So it was looking really great. Early in the morning on Friday, but then looks like the dollar really continued higher, and the pressure by the dollar, I think, is what caused the spike to be reversed. And notice where it got reversed. It got reversed exactly at the 200-day moving average. So far, gold was not able to penetrate. Notice that it was not able to close above the 200-day. Since November of last year, actually. So very kind of difficult chart in my opinion. Now we'll see what happens Monday. If we continue higher, then gold has quite a good chance, but if this is indeed a rejection candle, then when we get to gold breadth index, I'll show that we may actually completely unravel and maybe even retest this lows and possibly even December lows as well. Here's a weekly time frame for gold. I'm just showing the same rejection spike right there at 1264.90 or so. Yeah, it's a difficult chart, I think, and I can make a bullish case about it and I can make a bearish case about it. But again, if this is indeed a rejection spike, we could easily retest the lows from February, March, and possibly even lower. Here's GDX on the daily time frame, Gold Miners ETF. Here I was very hopeful because like we had 1, 2, 3 closes above the 50-day moving average with hollow candles, really looking good. Now here on Friday I see this big red rejection candle, almost a bearish engulfing, not quite bearish engulfing. That's why I'm giving it a little bit of a benefit of a doubt. Here we had kind of similar, patterns, and eventually the bears really took advantage. So I wonder if bears are already coming in, and we didn't even get to the new strong resistance which formed above, around 25.70 or so. Market breadth is kind of in between, not really remarkable, just normal basically. Bullish percent index started, that's why I started worrying really here back in October when we dropped into the 20s, and this could have been already beginning of a bear market. For the record, this is my proprietary gold breadth index. It's still at 2 and it has not dropped to 1. In other words, the bear market officially, according to this system, has not started. Problem is that we're seeing weakness. Here's one of the inputs for this indicator, and we were not able to regain. I need to see 90, a close above 90 here, and we were not able to regain that since October when we dropped below 10. The same goes for another input for this index. You can see that we keep dropping actually, and now we're on only 37.50. The bearish trigger for this set of indicator is 20, so we could still pull out of this. And additionally, here's the ITBM, which is intermediate term Breadth momentum oscillator for gold miners. This is also private data. It's now in a kind of overbought territory, so I wonder if the bears are going to now come in and attempt to push the prices lower. So it's really kind of a difficult chart, and it could really go either way, honestly. So I guess we'll see what happens next week. Okay, moving on to oil. This is West Texas Intermediate on a daily time frame. So here in March we had a breakdown below previous lows here from December. I think this is a support break. We had one attempt, came exactly to the support and pushed lower. Now we did bottom out here in mid-March and rallied. So now that we rallied here, there's a lot of trading activity in this area here, $53 to $55 area basically, and it's already possible that we're seeing the bears come in here. Like for example here on Friday, this looks like an upper shadow. Looks like the bears are selling here already. I mean, maybe this is a support break right there as well. So in my opinion, long term, even though these are 52-week highs here, I would still think that this is a bearish chart based just purely on supply and demand. And the supply issue is that there is oversupply of oil, in my opinion. So United States producers are ramping up production in response to higher oil prices. So it's possible it will break higher, but I just don't see it, honestly. What I do see is strong resistance here at around 55, and I think we may see another attempt by the bears here relatively soon, really. Here's natural gas on a daily time frame. I still think this is a bullish chart. This is a breakout level here at $2.50 from last year. Very volatile, big moves. So if you like to trade it, be super careful. And as usual, I warn new traders to just completely avoid it. There are just plenty of other opportunities, and most likely you will lose money, but it is also unlikely that you will make money, because this is just a very tough security trade. You gotta be very careful with it, and especially you have to size your positions correctly. And here at MasterChartsTrading.com, I'm super obsessed about position sizing. And the position sizing is important because you want to know before you enter a trade how much are you willing to lose on a particular transaction. I mean, it doesn't sound sexy because everybody wants to know how much money can I make. But in this business, I think it's more important to look at how much money can you afford to lose. And if you can afford to lose a certain amount, then you could bet or size a position according to that amount, and then buy X number of shares based on that amount. I teach all of that at MasterChartsTrading.com, so all of that is available to you if you sign up. Longer term, natural gas is, I think, bullish. There was a breakout here in June of last year. Continuation to fresh highs, big moves here, 52-week highs here, really deep pullback, and finally another rally. I think this rally still continues. Maybe we'll take out the 52-week highs. If you found this video helpful, please like it. Also, if you have any comments, please do comment below, and of course share this video with others who might benefit from it. Please stay tuned on how to find us on the internet. Thanks for watching, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right, thanks for watching, and please consider signing up for the trade alert services. Bye-bye.